Okay, tonight we have a list of boring stocks that can easily make you a millionaire. A reminder that most active funds do not beat the S&P 500 long term, and to always do your own research. But this ETF that we're going to talk about, that's made up of 100 boring stocks that can easily make you a millionaire, actually has beat the S&P 500, and that is, of course, the S&P 100. It's essentially just a smaller derivative of the S&P 500, taking the top 100 companies as opposed to the top 500. The S&P 500, for reference, has returned 10.4% since its inception, whereas the S&P 100, more concentrated, especially in tech companies, which have done better over the past 10 years, has returned 16% year over year over the past 10 years. And if you were to invest just $70 a paycheck into this for 30 years, you would have just over $1 million in that account at that 16% compound annual growth rate. And that highlights a couple things. The incredible return of the S&P 100 with its concentration in tech companies, which have lower margins and the ability to quickly scale, which is why we've seen them do so well. And it also highlights the importance of starting investing early, because 30 years is a long time frame. You might not be able to even use the money if you're retirement age 30 years from then. So remember, the best time to start investing was 30 years ago. The second best time investing is today to start. So the S&P 100 is a great place to do that. It's essentially slightly higher risk than the S&P 500 given its concentration, but much more rewarding in that 16% year over year. That is quite a bit better than 10.4. So we've put this one as a strong buy, and our favorite is the iShares S&P 100 ETF under the ticker OEF. And that is our list of 100 boring stocks that can easily make you a millionaire. It's super boring, not flattering, not sexy, but if you just do this, you cover 100 of the top stocks, and they have statistically returned really well. And if you're worried about future performance, Vanguard has forecasted about 5 to 6% year over year compound annual growth returns over the next 10 years, which doesn't seem that rosy. But remember, back in 2015, they were forecasting the same thing over the previous 10 years when it did so well at 16. So please drop a like, and I'll see you next video.